Hello everyone, welcome back to another video. If you are new to this channel, my name is Farhan and I help POA students like you ace their exams. In today's lesson, you will learn to prepare the allowance for impairment of trade receivables ledger account for 3 different financial years. You will also understand the accounting concept which requires us to make this allowance. And lastly, look into the effects on profit and current assets if we do not adjust for these allowances. You can see the question on the left hand side of your screen, and on the right hand side we've got all the workings which I'll go through and explain to you step by step. What I need you to do now is focus and follow through for an excellent understanding so we can get full marks in this question in the main exam. With that being said, let's begin. Ocean Fresh Trading is a sole proprietorship business that supplies seafood to restaurants. At the end of each accounting year on 30 September, the business reviews its trade receivables to identify trade receivables which are unlikely to be collectible. So based on the first paragraph, we understand that we are working with a business where the financial year starts on 1 October of a given year and ends on 30 September of the following or next year. So here we are given some information about our credit customers that we have got, and these credit customers are likely that they may not be able to pay us, okay? And we have been provided this information for 30 September 2015, 30 September 2016, and 30 September 2017, all right? Then we have got 2 more paragraphs with regards to Yum Yum and then Fabulous Foods, who are the customers that are already mentioned in this table. And you can see the requirement in part A of this question is to prepare the allowance for impairment account for the 3 years ended 30 September 2015, 2016, and 2017. So let's look into the ledger account that we have on the right hand side. So here I have the outline for the ledger account, which I have already constructed using the usual 5-column format, with the date being in the first column, followed by the details in the second column. Then we've got the columns for debits and credits, and lastly the net balance column. All right. So we want to look into the workings for this question in depth. So let me take your attention here. So year 1 for this business that we're working with, based on all the information that is given in the question, will start on 1 October 2014 and end on 30 September 2015, right? Because when you scan through the table that's provided to us, we are given the information at end of 30 September 2015. Which means this financial year, which is ending on 30 September 2015, must have started in the previous financial year on 1 October 2014, okay? So at 30 September 2015, we have got 2 customers, Yum Yum and Delicious Delights. Prior to that, we are not given any information, and based on what we understand, these customers may not be able to pay us. Therefore, we want to store these amounts which these customers owe us in the allowance for impairment of trade receivables account. Why do we want to do that? The allowance for impairment of trade receivables is a contra asset account which records the reduction for a relevant asset account, and the relevant asset account in this case is the trade receivables, who are the credit customers of the business. Now, this is like a precautionary measure where we want to make sure that we are not overstating our assets or overstating our profits and understating our expenses using the prudence concept. So there is this chance or uncertainty that we may not be able to recover these 2 amounts from these 2 customers, Yum Yum and Delicious Delights, all right? So we want to store this amount in the allowance for impairment of trade receivables account at 30 September 2015. So altogether, both these customers owe us $6,500 plus $8,700, which is $15,200. And this is the amount which we want to transfer to the allowance for impairment of trade receivables account at 30 September 2015. How do we do it if we were to journalize it? As you can understand, based on the information given in the question, we do not have any information regarding any opening balances for allowances that may have existed prior to 30 September 2015. So on that basis, we can consider that we have this allowance for impairment which is entirely new, right? Which means that our allowance for impairment of trade receivables now have to increase. So we are crediting the allowance for impairment of trade receivables by $15,200. Why? Because this is a contra asset account, which means when this increases in value, we credit it. Also, this is supposed to have a credit opening balance. When it decreases in value, we debit it, okay? So since the allowance for impairment being a contra asset account is increasing in value by $15,200, we are journalizing it by crediting allowance for impairment of trade receivables by $15,200. So at the same time, we know that whenever there is an increase in allowance for impairment of trade receivables, we are actually incurring an expense, because it's a bad thing for the business, because there's this uncertainty that you may not be able to collect this money from your customers. And that expense account is known as the impairment loss and trade receivables account. All expenses by default are debited, which means when they increase, we debit them. Now that we are creating this expense account, we are going to debit it by $15,200, okay? Now, based on this journal entry, we understand that the allowance for impairment of trade receivables account is being credited by $15,200, okay? So what we want to do is go back to the original ledger account which we have got, and at 30 September 2015, I'm recording the $15,200 on the credit side based on the journal entry where you have seen that the allowance for impairment account was credited. And it was mainly credited because we have got an increase in allowance for impairment since we don't have any beginning balances, right? And whenever there is an increase in allowance for impairment, we also incur an expense, which is known as the impairment loss and trade receivables, okay? Which takes place as the cross-reference in the details column, okay? And with the final balance being 15,200 credit at 30 September 2015 after everything is done, all right? So we want to transfer this ending balance of 15,200 credit as the opening balance in the next financial year starting 1 October 2015. All right. So you can see that I have drawn a line here to make sure you understand that we're working with different financial years. Okay. So in 1 October 2015, we're starting with an opening balance of 15,200 credit. Now, let's scroll back down and we look into the workings for year 2. So year 2 starts in 1 October 2015 because year 1 just ended on 30 September 2015, right? So therefore, year 2 is starting on 1 October 2015 and should end on 30 September 2016. So in between these 12 months, we want to look at all events that happen in chronological order. So starting with the first information that we're given here, right underneath the table, we can see that on 1 March 2016, Yum Yum served notice for bankruptcy. It could now only pay 20 cents for every dollar owed. The business received a check for this amount and the remainder was written off. All right, so let's understand how we can journalize this transaction with regards to Yum Yum on 1 March 2016. So Yum Yum just confirmed that they can only pay us 20% of what they originally owed us. We know that Yum Yum originally owed us $6,500, right? And now that they have confirmed that they can only pay us 20%. So 20% of $6,500 is $1,300. That's what we expect to receive from Yum Yum. So when we're receiving this funds, since the question clearly mentions that we have received a check, it means our funds available in the bank account is going to increase. And whatever funds are available in the bank account represent an asset for our business. So when the asset increases in value, we debit it. So that is why we are debiting the cash at bank account by $1,300. Okay? Now, you know that the allowance for impairment of trade receivables is an account where we store the likely amount of uncollectible debts from our credit customers, right? So originally, we had 6,500 plus 8,700 from the end of the first year, which was $15,200 that we have stored as a precautionary measure in this account, right? Now, we know that one of the customers, Yum Yum, have confirmed that they're unable to pay 80% of what they owe us originally, right? We know 20% is what we have already received, but 80% is not to be recovered, and 80% of $6,500 is basically $5,200, which we cannot receive. So now we have to reduce that allowance account where we have already stored the uncertainty with Yum Yum before. So we have to reduce that account by $5,200. We just discussed a while ago that allowance for impairment of trade receivables is a contra asset account, which means when it increases in value, we credit it, and when it decreases, we debit it. So now that we have to reduce that allowance for impairment of trade receivables account by $5,200 after getting the confirmation from Yum Yum that they're unable to pay 80% of what they owe us, we are going to reflect this by debiting the allowance for impairment of trade receivables by $5,200, which means it's going down in value. And at the same time, Yum Yum is no longer a credit customer in our books. Therefore, we have to remove whatever amount Yum Yum used to owe us from our business books. Yum Yum was originally a current asset because Yum Yum is a trade receivable or credit customer. But now that we no longer have this asset after Yum Yum has confirmed the bankruptcy and paid off 20% of what they owed us, we can remove the entire amount for Yum Yum of $6,500. And when we are removing an asset, we are reducing an asset, which means we have to credit it. So we are crediting trade receivables, specifically the account for Yum Yum, by $6,500. All right? Now, before we go to the journal and the ledgers, we understand that the allowance for impairment of trade receivables is to be debited by $5,200. Okay? So hold that thought and let's go back up to the ledger account, and you will see that at 1 March 2016, we have included $5,200 on the debit side with the relevant cross-reference for the account used in the details column being the trade receivables account of Yum Yum specifically. So make sure to mention Yum Yum, so you have to be specific, otherwise you're going to lose marks. So now we have got $5,200 debit here, which gets deducted from the previous balance of $15,200 credit. The reason we are deducting is because we have a mismatch between credits and debits. That leaves us with a balance of $10,000 with more weight on the credit side, because obviously when we deducted, we had got more credits than debits. Okay? All right. Now, in sequential order, what's next? So in the second year, after the Yum Yum thing is dealt with, we have got the end of financial year at 30 September 2016. So at end of 30 September 2016, we know we had got two customers, Fabulous Foods and Fish and Fish. So Fabulous Foods owed us $4,600 and Fish and Fish owed us $7,800. And we know that there's this uncertainty that these customers may not be able to pay us. All right? So altogether, the total amount that Fabulous Foods and Fish owed us is $4,600 plus $7,800, which is $12,400. Because we know it's not 100% confirmed that these people can pay us, and there is a significant amount of uncertainty involved with collecting this amount from these credit customers, we will transfer this amount to the allowance for impairment of trade receivables account at 30 September 2016. All right? And the total amount is $12,400, which is what should be the ending balance for the allowance for impairment of trade receivables at 30 September 2016. Okay? Previously, after Yum Yum was dealt with, we ended up with a net balance of $10,000 credit. And now we have to increase our allowance to $12,400 credit at 30 September 2016, which means we have to increase our allowance by $2,400. Okay? So whenever there is an increase in allowance for impairment of trade receivables, we also have an expense that is incurred simultaneously, and that expense is known as the impairment loss of trade receivables. Expenses by default are debited, which means when they are increasing, they're also debited. So therefore, we are debiting the expense account, which is the impairment loss of trade receivables, by $2,400. And at the same time, we are crediting the allowance for impairment of trade receivables account, which is a contra asset account, which when increases in value, we credit it, and the amount is obviously $2,400. Okay? So as you can understand, based on this journal entry at 30 September 2016, we are crediting the allowance for impairment of trade receivables by $2,400 and simultaneously incurring an expense, specifically impairment loss, by $2,400. So hold this thought now, and I'll just scroll back up to our ledger account. All right, I hope I'm not breaking your focus by scrolling. So at 30 September 2016, all right, we've got 12,400 credit as the final balance based on the totals owed by Fabulous Foods and Fish and Fish. Okay, and we understand that the allowance for impairment of trade receivables account is to be credited by $2,400. Therefore, it is recorded on the credit column, right? With the relevant cross-reference for the account used in the details column being the impairment loss and trade receivables. So make sure to write the full form. I just didn't get enough space. So we have got 2,400 credit, which now needs to be added to 10,000 credit because they're both credits. So there is no mismatch. So we can just simply add them, which leaves us with 12,400 credit. Okay. All right. So the ending balance at 30 September 2016 of 12,400 credit is to be transferred as the opening balance in the next financial year starting 1 October 2016. As you can see, balance brought down 12,400 credit. All right. So I'll just scroll back down again to look into everything that happened in year 3. All right. So year 3 starts on 1 October 2016 because, as you know, the most recent financial year just ended on 30 September 2016. And this financial year, starting on 1 October 2016, will end on 30 September 2017. So in between these 12 months, the only event that has occurred is on 1 December 2016, where Fabulous Foods declared themselves insolvent, and whatever amount they owed us is now confirmed as irrecoverable. So basically, we're not getting anything that they owed us. So they owed us $4,600, right? So we're not getting any of this amount. All right. So if we want to journalize this event on 1 December 2016, first of all, we understand that Fabulous Foods was originally a credit customer, also known as a trade receivables. Trade receivables are current assets of the business. Now that Fabulous Foods has confirmed that they're unable to pay this amount, we have to reduce this asset. And when we are reducing assets, we have to credit it. So we are crediting trade receivables, specifically the account for Fabulous, by $4,600. Now, at the same time, now that we have got confirmation that we don't recover $4,600 from Fabulous Foods, we have to reflect that in the allowance for impairment account. Now, the allowance for impairment account, as we understand, is a contra asset account which stores the uncertainty or the uncertain amounts from credit customers that we may not be able to collect. So we originally had some allowance stored, which was $2,400 based on what happened at the end of 30 September 2016 or at the end of year 2, right? So what's happening now is that we have got confirmation, and therefore this allowance for impairment account now has to go down. Therefore, we have to debit it, because when contra assets go down, we debit it. So we are debiting the allowance for impairment by $4,600, okay? So as you understand, this journal entry where the allowance account is debited by $4,600 is to be reflected in the ledger account. So scrolling back up here, so you can see that on 1 December 2016, I've included $4,600 on the debit side, okay? And the relevant account which is used as the cross-reference is the account of Fabulous Trade Receivables. So you have to be specific here, Trade Receivables, Fabulous. So $4,600 debit is deducted from $12,400 credit, obviously because there is a mismatch, which ends up with a net balance of $7,800 credit at 1 December 2016. Okay? All right. Now, after this event is done, what do we have next? Next, we have got 30 September 2017, which is the end of the third financial year. And based on the information given here in the table, we can see that we had one customer known as All Shill who owed us $8,000, and we know that there are significant uncertainties involved in collecting this $8,000. So we want to store it in our allowance for impairment of trade receivables ledger account. So at 30 September 2017, we know the ending balance for allowance should be $8,000, right? So after the event with Fabulous Foods was dealt with on 1 December 2016, we ended up with a net balance of 7,800 credit. Now we have to increase to 8,000 credit, and the amount of increase is $200. Whenever there is an increase in allowance for impairment of trade receivables, we also simultaneously incur an expense, which is known as impairment loss. So by default, all expenses are debited. Therefore, we debit the impairment loss in trade receivables by $200 at 30 September 2017. And because we have got an increase in allowance for impairment of trade receivables, and allowance for impairment of trade receivables being a contrast account, when it increases in value, we credit it. So we are crediting the allowance for impairment account by $200. So as you can see, this is what we need to reflect in the journal entry, in the ledger account. Okay, so in the allowance for impairment ledger account here, so you will see that at 30 September 2017, which is the end of the financial year, I'm including $200 in the credit side because obviously there is an increase from 7,800 to 8,000, right? Because the ending balance is 8,000 credit at 30 September 2017. And the relevant cross-reference account that is used is impairment loss and trade receivables in the details column, which is an expense account, okay? After that is done, don't end here. You need to also transfer this ending balance as the opening balance in the next financial year, starting 1 October 2017, because you have got one extra mark allocated for that, okay? All right, so that's all for the first part of the question. I believe you have got a good understanding of how the journal entries actually make sense for how we construct the ledger account, okay? So now we move to part B, which is asking us to explain why do you think it is necessary to make an allowance for impairment of trade receivables. Now, we have already discussed this today, but let's discuss this again. So the prudence accounting concept states that we should never overstate our assets, we should never overstate our profits, and we should never understate our expenses. Now, we don't overstate our assets because we want to find the net trade receivables where the allowance for impairment of trade receivables, the uncertainty involved in collecting the money that our credit customers owe us, have already been accounted for. So you want to make sure that you have included that measure as part of your net trade receivables calculation. Because if you do not include that uncertainties involved with collecting these amounts from your credit customers, will end up overstating your assets. And you do not want to do that, because if you overstate your assets, it will impact your finances or decision making regarding how you can move forward, right? At the same time, if we do not include this allowance for impairment of trade receivables, we do not have an expense account which is simultaneously incurred, which we already know to be impairment loss on trade receivables. So we do not want to understate our expenses, because if we understate our expenses, we'll end up overstating our profits. So that is why, using the prudence accounting concept, we want to make sure that the allowance for impairment of trade receivables, which deals with the uncertainty regarding the amounts that our credit customers owe us, is accounted for in our calculations, so that we do not present an overly optimistic financial performance of our business, but rather we are careful, okay? All right, so then we have got the last question. State the effect on the profits and the current assets for the year ended 30 September 2015 if Ocean Fresh had not made an allowance for trade receivables on 30 September 2015. All right, so we're just basically in the first year. So we understand that Yum Yum and Delicious altogether owed us $15,200, $6,500 plus $8,700, okay? And if we hadn't adjusted for this allowance for impairment, then we would have understated our expenses, because obviously we wouldn't be incurring an expense, which is the impairment loss on trade receivables. And if we're understating our expenses by $15,200, we'll end up overstating our profits by $15,200, okay? We have already discussed this, but it's good to go through this again. And at the same time, current assets will be overstated by $15,000 because when we calculate the net trade receivables, we start with the gross amount or the original amount for trade receivables, and we deduct any allowance for impairment, which is the uncertainty involved in collecting the cash that our customers owe us. So we understand that 30 September 2015, there are uncertainties involved with Yum Yum and Delicious. The total amount owed to us is $15,200. So if we do not include that $15,200 here in our allowance for impairment account, then we would have overstated our current assets. Okay? So that is why we make this allowance in the first place using the prudence accounting concept. All right. So that's it for this lesson today. I believe you found value in this content. Make sure to drop a like and subscribe to this channel and share this channel with your friends. In the description, you'll find a link to book a free Zoom call with me for your online coaching requirements so I can help you prepare for your exams that are coming at the end of this year. With that being said, I'll conclude today's lesson and I'll see you in the next one.